Hey everybody, welcome back to today's Market Explained, a four-star media experience. We'll start our podcast for today. Welcome everybody. I'm Brian Castle. I'm your host, and I'm here with Mr. Chris Reardon. Chris, welcome back as my trusty co-host for today's Market Explained.
Thank you, Brian. Good afternoon, everyone, and glad to be here. Glad to talk a little bit about these markets and what's going on.
Well, and Chris is our Director of Development at FourStar, and he manages all things regarding product and services and portfolios. He's still a Clevelander. I still call him the Indians. He loves his Indians, but they're the Guardians now. And he has a golden doodle puppy and a burgeoning young family with what, three kids under 3 years old, right? 4 years
Uh,
old. Now they're a year older.
they're a year older, so one's 4 and the twins are 3.
Oh
So
boy. Oh boy.
only getting bigger.
Nice. Well, great. I'm Brian Castle, and I'm the founder and CEO of FourStar. I'm the Chief Investment Officer and Chief Compliance Officer as well. I'm an advisor to insiders and CEOs. I'm a member of the Boy Scout Foundation and an international committee of the Boy Scouts of America as well, or now Scouting America. I'm also father to Quinn and Evan and husband to the amazing Tripty. So this is our lineup, Chris and me, for the show. And folks, if you can give us a ranking on Apple iTunes. You can give us a ranking 5 out of 5. The more we get 5 out of 5 rankings, the better we do. And then more and more people see our podcast. We're still ranked in the top 1% in financial podcasts in America. So we want to keep that ranking and grow it. But we have a lot to talk about today. There's been a lot of strange things going on in the world. Chris Reardon, do you want to begin a little bit and let's talk a little bit about the markets?
Yeah. Well, let's do a kind of a rundown of the asset classes and what we're seeing movement wise there. So, domestic equities, no surprise here, is still leading the way. It's still the number one position. It's actually gained 3 points from the last podcast, and it's at 272 tally points. So, that trend's been going on. It's been gaining not a ton of points, but it has been just slowly and steadily picking up points. I think more interesting is in that number two position, international equities. It's at 262 tally points and is +9 from the last podcast. So, we are starting to see international equities challenge domestic equities slightly now for that number one position. So that will be interesting to see. It's now exactly 10 points away from domestic equities in that number one position. So something certainly to keep an eye on. Commodities is in the number three position, and that's at 228 tally points and is -4 from the last podcast. So there's definitely been obviously commodities that are running gold, silver, things like that. But just because a couple are running, the broad commodities market as a whole, though, has for the most part been stagnant, maybe a decline slightly there as we're seeing. So that's in that third position. And I would say now it is by far that third position. At one point, it was kind of in a deadlock with international and domestic equities, but it has since kind of trailed off as the top two asset classes have kind of spaced themselves out now and gained some ground. In the fourth position is cash, and that's at 128 -1 from the last podcast. Currencies is in fifth at 108, and that's -7 from the last podcast. And then last is fixed income, and that's at 92 tally points -3 from the last podcast. So,
Hmm.
outside of the top two, everything else lost tally points from the last podcast. Every other asset class outside of domestic and international. So, kind of interesting. I mean, it really shows what this really highlights, I would say, is a risk on environment. And, to what Brian has said before on this podcast, that's actually a really strong growth asset allocation here, because commodities, albeit good for short term, we see commodities in that 1 and 2 position. It really is a drag on the overall general global economy. So, domestic international leading is a positive sign overall, but we'll have to see if that holds up.
Yeah, that looks like, I mean, the biggest gainer, of course, is international. We haven't had an international run in quite a while, but this year has been really strong with international, and commodities is doing the fade, which is, as you say, an important thing for eventually for commodities to do. And all the scaredy cat groups, the cash currencies and fixed income are down in the bottom. So this is bull market, isn't it?
Yep. Yeah. I mean, this would be a typical bull market, especially with domestic and international leading the way. It's becoming more and more of a typical bull market, I would say.
Mhm. Well, and then looking at the markets in general, Chris, S&P is up 13.6 year to date now, and it's up 3.5% since our last podcast, hitting new highs. Russell 2000, the small caps, that's the story in the short run, up 11.19, up 6% since the last episode, and the last episode was 5% higher than the last episode. So basically, in about a month, maybe 5 weeks, Russell 2000 has gone up 11, almost 11%, which is pretty amazing.
Yep. Yeah. I mean, when those run, they tend to run fast. And one thing with those small caps, Russell 2000, is they tend to be highly sensitive to interest rates. And I think the last month or two, since some of the economic data, inflation, things like that that have come out, I think have pushed more towards, rate cuts, maybe more rate cuts, things like that. So that's why I think we're seeing, at least in the short term, that the run right now in small caps.
Right. And the NASDAQ is up 16.9, and that's up six since the last show. So that's like the leading index again. So S&P's up strong, NASDAQ's up strong. So the tech stocks are back at it again. That's usually kind of bull market stuff. Small caps are coming out of what it seemed like there was going to be a recession. It looks like there might not be a recession. We're going to get into that in a minute here. Usually the small caps lead coming out of a recession. So maybe this is the blast off of the small caps from a recession that never happened,
Yeah,
possibly.
I mean, I think it's possible. I mean, I think, as I said, I think the biggest driver of it will be, they're getting a bit of a pop right now because of the news, the events, what the Fed's doing. But can they sustain that outside of kind of that news cycle? That'll, I think, will be a big telltale sign.
Well, we'll be watching. And the other two indexes we track, the Dow Jones up 9.1 for the year. It's up 2% since the last show, but that seemed to have slowed down. Dow Jones and the Russell 1000 were leading the index list a while back. Now they're not. Now they're in third, fourth, and fifth place. Russell 1000 value up 9.66%, up only 0.75% since the last show. So the dividend stocks were leading most of this year. Now it's shifted again back to the bull market type stocks. And then the small caps are coming in there as well, which is quite interesting. So we'll see. We'll see where that leads us. Um, Chris, let's dig into the sectors. Where do we stand in
Yep.
that?
Yeah, so some interesting movement here. Communications is still leading the way, and that's been the winner, and that's up 24.37%. So, obviously, just a really interesting blend, I think, within that communication services sector because it is a lot of technology. I mean, you have the Googles, you have the Metas, companies like that, but it also you do get some of like the Verizons that are kind of like a utility tech company. So it is an interesting blend there that has benefited so far this year. And the number two best performer is info and technology. And this is a huge comeback. This had just a rocket ship up since our last podcast. It's up to 21%. It's up 21% so far year to date. So that's probably the biggest winner. Industrials is in the third position. That's up 17.22%. So it has gained. It just hasn't gained nearly as much on the pace as info and technology. And then utilities is at 15.78. Similar story. Continue to move up. It's just a bit slower there. So
Mhm.
really interesting kind of composition there. And then looking at the worst performers, so the flip side of it, healthcare continues to be the worst performer. That's up 2.15% on the year. Consumer staples is now the second worst performer. That's up 2.33%. Real estate is the third worst performer at 5.46%. And then consumer discretionary is the fourth worst performer. That's up 6.52%. So what's really interesting, if you guys have listened to our past podcasts, is energy used to be down here. And if we maybe taped this a week ago, it probably still would be, but we've seen the last week, 2 weeks, it has kind of jumped all the way up and just jumped the last two or three sectors there to, I think it's up about 7%, just kind of barely
Mhm.
pulled its way out of there.
Chris, these numbers really show the wide divergence in performance. So we just talked about how the S&P was up 13.6, But yet the best sector, communication services, is up 24, and the worst sector is up only 2,
Yep.
healthcare. So we have a 20-point gap between the 11, the number one, and the 11th, the lowest sector in the S&P. Pretty amazing when you think about it. So that makes the case for what we've always tried to do, is try to own the best sectors and eliminate completely the worst ones. And that's how you can beat a benchmark, right? So this year seems like an easy year to beat a benchmark.
Yep. Yeah. I mean, it's definitely, I mean, it's a what, 22% difference there. And I mean, I think it's been a really interesting year. And we've talked about this as we've seen it kind of ebb and flow where, there was a period of time where the S&P 500 equal weight was actually outperforming the pure S&P. And that's positive. That shows a broadening of the market rally. We're starting to see really in the last month, it switched back to that S&P 500, more momentum based. We're seeing the typical names you see, the Nvidias, the Palantirs, Oracle, these big behemoth names that are really starting to take over the index again. So it'll be interesting to see. I mean, I think having a less of a dispersion between that 1 and 11 is better for the overall economy. But as you said, Brian, as far as portfolio managers as we are, it does give us a little bit of a benefit.
It does. So anyway, it's just interesting on all how it all shakes out. Chris, you want to talk a little bit more about the economy now, I think.
Yeah, yeah. So, I think the biggest topic as far as just general markets going on right now is news-wise, the Federal Reserve last week, they came in, they cut interest rates by 0.25% or 0.25. So that, that was pretty much expected. I think what was the anticipation there was if they would take a leap and maybe do a 0.5% or 50 basis point pullback, but they were more conservative. I think that alone could have maybe caused the market to pull back, but some of their messaging afterwards, they did note that a narrow majority of the Fed officials projected 2 more rate cuts in 2025 for a total of 3. And I think overall the market that was a little bit better than what they were predicting. So that kind of helped keep the market, and overall we saw a boost really off of that. So that's going to be big playing into it. As we know, the Federal Reserve can have a significant impact on the market and what the expectations are of lowering interest rates. With some of the larger corporations, the impact is, I don't say minimal, but can be less. But where we really see the impact is small caps, things like that, financials. We see that really reverberate out. So, that's going to really play into potentially, and we haven't seen it impact yet, but the housing market is a big one. You see mortgage rates, things like that. There's a lot that can play into that. Albeit one, I think, misunderstanding a lot of people have is mortgage rates don't necessarily trade kind of one for one off of what the Federal Reserve does. So if they, reduce it to say 4%, mortgage rates aren't going to go drop immediately to 4%. They're not even going to drop by 0.25% just because they're reduced by 0.25%. What they go off of is actually the 10-year treasury. The average mortgage in the US, the average kind of term it's held is actually 10 years. So they tend to feed off that number more. So it will come down. I think it's at a like 11-month low, the 30-year mortgage interest rate right now. It will come down, but it certainly isn't going to be, at least right now, don't be expecting a 2% mortgages again, or even 3% yet. Maybe if we continue to see rate cuts here, continue to see pullbacks, maybe we will start to kind of taper down to under 5%, but definitely not in the very short term.
Right. And so they did lower rates, Chris, but yet the Fed had said that they want inflation at 2%. And the inflation in goods and services had been well above 2% for a while. And the inflation numbers got a little bit worse the other day. So they were wondering, well, why is that happening? So it seems like the Fed is willing to put up a little bit of higher inflation. And I guess that's the nature of a highly indebted society like America. But you wonder if they're going to go back to their traditional dual mandate. Right now, they're focusing more on employment and other things, and that's not doing well. So they're lowering rates to solve that. And the other inflation is not doing well either, but it's not as bad as it had been. Maybe that's the thought process.
Yeah, I mean, I think we've really seen inflation stagnate out here. It's kind of gone up a little bit, gone down a little bit. There's been so, yeah, I think they're looking at it from the perspective of I don't know if it'll ever get back down to the level that we want to, but the risk to the economy and their probably eyes, especially as we see some weakening of the jobs market, things like that. They're looking at it as a protection. And then I think on top of it, as you mentioned, Brian, the debt. I mean, the U.S. government can't really afford to service debt at the current interest rate. So sooner or later they're going to have to lower it.
Mhm.
So yeah.
Yeah. Yeah, it's a very difficult job. Obviously, Trump has one opinion and Powell has another opinion. But Powell's now they finally lowering rates. Trump they should be a lot lower, and part of that has to do that we have so much debt that we want to lower the debt cost, right? And refinance things when it's lower, and that would be better for the American government. I think that's part of Trump's angle. But
Yeah, exactly.
yeah, so all right, well that's great, Chris. Well, thank you. And what about inflation?
So no one knew inflation numbers since the last podcast. The US government, so a couple of things that I can at least go as far as economic numbers. The S&P Global Manufacturing PMI came in at 52 in September. That was down from 53 in August, but in line with expectations. So anything above 50 is considered expansion. So that's overall positive.
Mhm.
Flipping over to the services, so the S&P Global Services PMI, that came in at 53.9 in September. That's down from 54.5 in August, and slightly below expectations, which were of 54. So,
Mhm.
overall, what does that mean? It means that it seems like activities as far as services and manufacturing activity it's still an expansion. We haven't seen it completely collapse. We haven't seen it contract yet. I think that's positive overall for the US economy. But obviously the trend of it right now is in a downward trend. So we'd like to see that stop and reverse or at least stabilize. Because if the trend continues, it will obviously move to contraction. So certainly something to keep an eye on. Switching over to the labor market, this is definitely something the Fed is looking at. New jobless claims, the recent one fell to 231,000 for the week ending September 13th. That was overall a drop following the previous number, which was upwardly revised to 264. So it fell from 264 to 231 for jobless claims. So that was overall good. Obviously, a lower jobless claims number is better. But I think even more important is we got news that the U.S. annual jobs number, and this was going back to March, so it's year over year. So March 2024 to March 2025, it was revised downwards as far as the amount of jobs there were by 911,000 jobs. And this caused obviously I mean, that's a huge miss, a huge amount of numbers, and does show that even though they try to collect this data and they try to make it as accurate as possible, there still is a lot of errors. There's a lot of discrepancy and things like that that can really fall into these statistical data. So that obviously shows a much weaker jobs market than was previously being shown. So I think that did have a larger play into the Fed's decision to start or lowering rates now. And then flipping over to the housing market, U.S. housing starts fell to 1.307 million in August. That was below expectations. Expectations were 1.37 million, and this is housing starts, so building essentially, home building. But even more importantly, I think if you look at the July number, so it was we'll call it 1.3 million in August. In July, housing starts were 1.42 million. So we are seeing a bit of a slowdown there, and housing starts were down 6% year over year. So, once again, mortgage rates, the more those come down, it's not going to be a one for one, but they are going to come down if the Fed is lowering interest rates. The better that is for housing starts, for home builders, for all that, because it makes houses that maybe have to be built with the current materials a little bit more affordable for the average buyer. So, and then the last thing I will just mention, just from kind of the general U.S. economy, is the U.S. government is facing another potential shutdown on September 30th. And this came after the Senate failed to pass a stopgap funding bill. So I know they're obviously looking at, and maybe we'll get an 11th hour, 11th hour solution on this. But right now the projection is we will go into a government shutdown again, and we've had these before. I mean, I can't remember how many. We've had a bunch in the last couple of years, though. So it's nothing out of the ordinary necessarily. Obviously, we're going to see some government employees. They're going to, close unnecessary things that aren't critical as far as people that have to maintain on the workforce. So we'll see as that approaches, maybe if it becomes more realistic or if we get another a bill and a solution.
Yes. Yeah, it's quite confusing things in the economy. Now the shutdown will complicate that a little bit. Inflation was heating up too. Again, like I mentioned, Chris, groceries had their biggest jump month over month, primarily in produce in 3 years last month. And so that's affecting inflation. And coffee is up big. Part of it is tariffs put on by President Trump. The country of Brazil, which is the biggest coffee producer in the world, they have been having a political fight, and the current president now jailed his previous predecessor, Bolsonaro. And so Trump is using tariffs, obviously, for not just economic ends, but political ends. But it's also creating something new in the whole inflation scenario regarding coffee. So anyway, we'll see how this all plays out. Inflation is still a problem, but they're not focusing on that right now. Let's hope it doesn't get out of control.
Yeah, no, I mean, I think it's, the coffee market's really interesting because, I mean, it's been one of the best performing commodities, albeit the last month. It's actually the coffee futures, all that, the trading aspect of it has really come off that trade. So, on a positive side, maybe we'll see that impact, bring in lower prices. We'll have to see because, as you said, Brian, the tariffs could have a say to that, what the final consumer pays.
Right. Well, some comments on some companies. Nestle has had some big scandals lately, and there might be possibly even a breakup coming there. But Nestle, both the CEO and the chair have been in some sort of a scandal. Recently, the CEO had an affair with a direct report, and it rocked the company and caused a lot of reputational damage. So we'll see what's happening. And of course, Nestle is the company with all those great brands, Kit Kat, Purina, all the other Nestle chocolate brands and everything else. So we'll see what happens at Nestle. Um, Big news in the real estate world yesterday, Compass, which is a startup, a tech-funded, private equity-funded startup, has decided to buy a collection of brands in a company called Anywhere. Now, we've all heard these brands called a Baker, Century 21, Better Homes and Gardens, Corcoran, which is Barbara Corcoran, her original firm that was acquired. She's, of course, on Shark Tank, ERA, Real Estate, and Sotheby's International. So by combining those two companies, that have 25% of the industry now. I'm sure antitrust is going to look at this, but 25% is not a big concentration compared to some industries. But we'll see what they do. But this has been a very, very fragmented industry for a long time, and now it's starting to consolidate a little bit. So maybe they'll let this order of it go, and maybe not. We'll see. Um, so that's a big development for the folks in real estate, and that'll change as interest rates go down and the real estate market actually acts a little bit better. With rates going down, there'll be more activity. I know the mortgage people and all the real estate people, my wife's in real estate, have been suffering for a couple of years now with the higher interest rates, and things have been very slow. Another area that's been very slow is the IPO market. And Chris, a number of years ago, they allowed class action lawsuits against IPO issuers and investment bankers and others if things weren't going well. And that was a new change, and that really cast a pall in the IPO market. So many companies don't want to go for an initial public offering. They'd rather stay private, or they'll trade between one private equity firm and another, and they don't even want to go public anymore. But they're just going to make a change where they're going to go back to arbitration as the form of dispute. And that's the way it was prior to this change. I remember back in the 90s and early 2000s when the IPO markets were very, very hot. And it's been very, very slow since then, almost about 20 years of not a great IPO market. They're going to try to bring that back now by changing the element of dispute in there. So that's interesting. Um, Also about other companies, Oracle just got a huge order from OpenAI, and for a brief moment, the stock was up 30%, and Larry Ellison was the richest man in the world, eclipsing Elon Musk. And they were happy to do that. I know politically, many of the media was against Elon Musk, so they were happy to trot out Larry Ellison as the wealthiest man in the world. I think it's gone back down a little bit, but because of that huge order from OpenAI, the stock popped. So that was interesting. And I know there's some other big news in technology, Chris, you've got later. But let me also mention one more. Larry Ellison's son runs Paramount and Skydance, a new company that was just literally formed last year and literally closed, I believe, in the last month. Well, they're making a bid now for Warner Brothers Discovery, so they're consolidating the entertainment industry under another Ellison name. So how about that?
Yeah, a lot of moves, a lot of deals going on right now, which is good to see, I think, overall. I mean, obviously some consolidation can be concerning, but I think overall some of these industries are kind of ripe for consolidation to a degree.
Yeah. So on the other side of the OpenAI thing was NVIDIA, Chris. You got something on that?
Yeah, so big news came out. Nvidia came out and said they plan to invest up to 100 billion in OpenAI, taking a significant stake in one of its largest customers. So the 100 billion number is kind of, I don't say fungible, but it's they haven't really detailed. Is it 100 billion in straight cash? Is it stock? What's the composition of that? But it also brings up the moral aspect. If Nvidia is investing such a large sum in one of its largest customers, kind of essentially you're driving the demand for your chips up, because if OpenAI makes big strides, then they'll need probably more powerful chips, which NVIDIA builds a chip. So it'll be interesting to see if this falls under any regulatory scrutiny. But as of right now, I think obviously that's a big boon for OpenAI and the competitive advantage there. And then staying in the tech front, the app TikTok, which has been discussed and we've talked about on here, and obviously the Chinese and the data they collect from it and the concern that the U.S. has had on it. Well, they're close to a deal which would allow them to maintain their U.S. operations. You can still get on TikTok now. They've kind of pushed the deadline for it to be shut off out. And so now this deal is kind of coming into fruition right now. So ByteDance, the final deal will most likely look like ByteDance, which is the Chinese-based company, the current owner. They'll own less than 20% of TikTok US. Major investors will be Oracle, interestingly enough, and Silver Lake, which is kind of a private equity fund. So those will be kind of the largest stakes as far as investors that'll take that 80% out. And then on top of that, an agreement is going to be had that will require all the data on American consumers or users to be stored on US cloud computing infrastructure run by Oracle. So nothing's finalized yet. But for those of you that enjoy the TikTok app or anything like that, obviously this is promising from that aspect. So that's overall good to see out there.
It is for sure. Now, what about international? There's some other big news going on out
Yep.
there.
Yeah, switching over to the international markets, Japan's U.S. exports fell nearly 14% year over year. And this is really interesting. I think it's about the fourth month in a row we've seen. I think the last one we talked about is about a 10% drop in exports to the U.S., and a lot of it's due to tariffs. The main bite recently has been from autos and chip making machines. So, autos, I think everyone kind of expected. I mean, Toyota, some of the big Japanese car makers that a lot of consumers love. We're seeing a little bit of lower demand as those heat up price wise on the U.S. side. And then staying with Japan's core consumer inflation rose 2.7% in August, and that was down from the July reading of 3.1%. So that's overall really positive. Still, just like our inflation, it's still higher than what they want, which is 2% is what their projected is. But it's obviously moving in the right direction. That's good to see. It's very important. We saw this when we saw the reverse carry trade, where we had the weakening dollar, the strengthening yen. Obviously, that can have a big impact. So if we see Japanese inflation rear up again, and we see the Bank of Japan have to raise rates, that's when that trade, if you will, comes into play, and we could see some of that ripple and cause some short-term distortions in the U.S. market. So
Mhm.
important to keep an eye on that. And then lastly, in Argentina, so Argentina's bonds and currency strengthened the last couple of days as the U.S. Treasury Secretary voiced that the U.S. would consider significant support to Argentina to bolster the country's financial situation. So, this overall had a great impact to Argentina. I know the Argentina peso strengthened by about 5%. They were looking at potential swaps, things like that they could do to help bolster just the market and their general financial institutions. And then the last little thing I'll touch on, it's kind of recent, gold. And from the commodities front, gold climbed to a new record high today of $3,790.82. That new record was mostly driven by geopolitical uncertainty. We're seeing a little bit of kind of tension heat up a little bit on the Russian-Ukraine front as drones have gone into NATO country airspace, things like that. We've seen just, kind of some heightening there of tensions. And then obviously with the Fed lowering interest rates, that tends to usually weaken the dollar. So that, we have kind of a two-headed front there that's really driving gold to new highs now. So gold continues to climb, and silver on top of that continues to be both huge gainers, if you will, from the recent weakening dollar.
Fascinating. Well, Chris, let's go into our segment, what we see out there in the final. I've got a couple of notes here I want to share with everybody. So just looking at different cultural trends and that, kind of economics and businesses kind of downstream from culture and the things that are changing in the culture. And drinking is down. The younger generation is drinking less than their parents. And that's interesting. The youngsters are on their phone and computer, and they're not drinking as much as it looks like. Now, I just got back from North Carolina State in Raleigh. I saw a lot of drinking going on there, but on the margin, it looks like it's less than it used to be, and so that is affecting a lot of the beverage companies. And also among that same group, the young cohort, church going is up, and so folks are going back to church. It seems like we had a secular movement for years where people were leaving faith-based operations. Now they're coming back. And of course, in the last 2 weeks with the assassination of Charlie Kirk, who was very Christian-based, there's been tons of Christian rallies all over the country. And so that's been very, very visible. And then the numbers have been staggering how many young folks are involved in that. So church going is up. Turning to international trade or back to international trade, President Trump has decided to fix the H-1B visa market, and that obviously affects trade quite a bit. But apparently, both sides realized that there was an awful lot of abuse going on in the H-1B visa market, where they're just bringing in all kinds of people without really thinking about it, and they weren't following many of the rules. So now President Trump is going to put up $100,000 cost per company to bring in people under H-1B visa that'll actually make them be serious about what they're doing. And some of the folks that were coming in without really much standing, that they're only going to find the best and the brightest, and then that will help them focus on American workers. It'll also raise American workers' wages most likely, as the door for bringing in all cheaper foreign labor is now changed to unique foreign labor, not just cheap foreign labor. So the abuse of the HB1 visa system is ending. Chris, I think you had a couple of comments.
Yeah, I mean, I think one thing to note with the H-1B visa, especially, is that the biggest user of the H-1B visa is obviously Amazon. So it'll be interesting to see how that plays out. And I think, the flip side to that, I think the argument that other people have made is then we're going to see more people, more jobs just get, pushed over to India, things like that, cold call centers, things like that. So we'll see. But I do think overall, it does help kind of tighten, and restrict a little bit as far as, who's allowed into the US, just to make sure. I mean, obviously it's a very desirable nation for people to come to. But we just want to make sure that we're getting kind of the best of the best. We're getting that cream of the crop that we need.
Mhm.
from an expertise level. And then the other thing I'll note from what we see out there, kind of a reflection to a degree on what you said, Brian, but this last week we had kind of an interesting segue in the entertainment industry where Jimmy Kimmel, said some terse remarks about the assassination and Charlie Kirk, and they kind of suspended him, let him off the air. They were originally going to, I think, just close the his late night show. Well, now they just came out that they are going to be, after suspending it for a week and a half or 2 weeks, they're going to be relaunching it. But there is one of the distributors, I think that covers about 22% of the country, that is refusing to air it now. So there's still a lot of, I think, a lot of, I don't say fighting, but a lot of discrepancies about, what should be said, where should be said, what's over the line. So, I think, looking at America as far as right now, politics, geopolitics, just the overall fever pitch it's still extremely high. Obviously the recent events have only heated that up. And I think that does play to a degree into the economy and how investors and how the general populace is feeling. So I think that does play to a degree into, the move we've seen in precious metals and gold, things like that. So, we'll see how that plays out, but it's certainly been a little bit of a scary time right now to be, be an American to a degree.
So we still have free speech in America, Chris, but if you work for a company, for example, or you represent certain people, you have to be worried about what those people think of you. You can say whatever you want, but you may not want to say something. And that's, I think, what happened to Jimmy Kimmel.
Yeah.
So again, it's also a matter of if you're damaging people or you're threatening people, that free speech is not protected. But free speech generally is protected, but there has to be some measurement to it as well. And that's kind of what we're seeing now, finally.
Yeah, I mean, I agree. I think that, it was obviously up to the network, it was Disney to make that call there. And yeah, I think that the pushback to that degree and we've seen this on both sides, is, comedians' job is to push the boundaries, right? So, it's sometimes tough to find where that is. So, we'll see. It's definitely going to be an interesting, if you will, and tough, I'd say, we'll see remaining of the year, but definitely a much heated environment right now.
Yeah. Couple more quick comments. So Defense Department is cleaning up some of their policies. They used to allow all journalists running out all throughout the Pentagon, and they realized that there were some members of the media that were not being fair, they were being very anti-defense for whatever reason, and they were being really completely biased against the Defense Department. So they're actually going to put some restrictions on now, what they can write and what access they give them. And it may cause less disruption in our military. And there were always kind of consternation and things going on in the military because of what some of these reporters were writing. So they're going to restrict some access, and we'll see how that plays out. Back to the international side, one of the big issues for America is that we have a big benefit program. Obviously, we've got welfare, we've got Medicare, Medicaid, and we've got very, very generous benefits. Some think some of those benefits are too much. Some of them should be cut. Others think they should be added. Well, that's like the only part of the budget that is really almost totally on cruise control because of the rules that have been written. Well, in Germany, they're finally cutting now welfare benefits. They realize that theirs gotten out of control. Benefits are basically putting Germany at risk, that according to the Chancellor Friedrich Merz. So now that's kind of political suicide in America. If you say you're going to cut Social Security, or you say you're going to cut Medicare, Medicaid, there's a whole lobby of people out there always fighting you. So we'll see what happens in Germany. That may be their culture, and maybe that chancellor will be okay. But that's their view of it, is that the cuts were too well needed. Also international, many folks don't realize that the main city, capital city, Johannesburg in South Africa, recently had undergone some policy changes that forced companies to move out of Johannesburg. So it's like the high rises in downtown Johannesburg are virtually empty, and all the companies have moved out to the suburbs. And there's some new leadership coming in who are going to try to change some of those policies. So here's once again where negative policies toward commerce change how people operate. and basically they made a city almost vacant. Uh, and so now it's going to change. And new leadership coming in, new tax policy, and some of it had to do with all the racial strife that's been in South America, South Africa for many, many years. So we'll see. And then also I saw Giorgio Meloni, the lady prime minister of Italy, got on and she said yesterday, if you enter our country illegally, you will be deported immediately. And so there is a big move on, not just in America, but all around the world, including Italy and other countries, that we're no longer just going to allow people to pour over our borders and get benefits out of our government, right? So they're trying to get control of some of those things, and that's what President Trump has done here in America as well. So anyway, there's a lot of interesting things, and those things all affect the economy. They all affect the markets. They all affect the balance of payments between continents and everything else. So we'd like to mention some of those big changes as they develop. So Chris, after we go through all this and we see now the markets are rising, I always like to finish with what are we doing about all this? Well, the portfolios and the four-star models now are all fully invested. We did have a period of time in April, I'm sorry, March through about early June when we had gone to maximum cash and we were very protective and we saved our investors a lot of money. But since that time, we've been in bull market territory. And since the bull market began, it's really broadened out, Chris. We saw that in the last 2 weeks.
Yeah, I mean, we've seen it certainly broaden out. The last couple of weeks, I would say, we've seen it kind of constitute back into a few names, but overall, as we pointed out there, I mean, there's a big dispersion between the 1 and 11, but I mean, you have names up there. It's not all tech names. You have the industrials, utilities. You have a lot of names up there that are still doing very well.
Yes. So now we're seeing really a broad-based bull market, which wasn't there only like a month ago. It was a bull market, but it wasn't terribly broad-based. And so now we're seeing the full thing. And so this may be the bull market that comes out of a recession that never happened. That's kind of what that's kind of our working theory at this point. So anyway, so what are we doing about it? We're fully invested in all of our models, and we're looking to make gains at this point, and that's usually the position that the markets are in about 85% of the time. So we're back to that, and we're looking forward for hopefully positive things out of the economy. The American economy is still the strongest economy in the world, and now with a lot of new policies, it's going to be hopefully even better and better. I think that's about it for us folks today. Um, don't forget, everybody, that if you go on the leadership matrix on the FourStar Wealth site, you can see lots of interesting blog posts that we put up there. There's one that we put out just a few days ago about the need for power and can AI ever be green? A lot of interesting subjects that we see articles that we think are interesting, so we thought we'd point that out. And then a piece about being wrong is a superpower, and it has to do with gold stars, how people avoid mistakes, has to do with the Hershey Company and snacking. So have a look at that as well. Chris, I think we're done, right?
Yeah, I think that covers it. Thanks everyone for listening, and make it a good rest of the day.
Thanks, everybody. We'll be back again with another great episode of today's Market Explained. So this is FourStar Wealth, Brian and Chris, over and out. Thanks, everybody. Bye bye now.